All right. Now that you understand sort of the concept of financing, let's dig into how to find financiers and lenders and what's those conversations to have and what you need to have ready when you have those conversations. This is where it all starts. How are you going to pay for real estate? If you got all cash, great. That's what you want to do. Great. Most of us are going to need mortgages. And I know, and I've taught you that mortgages and lenders and borrowing money is your best friend in real estate investing. And it actually reduces risk because you're spreading your money out. You don't have all your eggs in one basket. You can leverage, you can create that mutual fund approach. And it only takes about 4 properties to change your life. I left my day job after 4 properties. I'm not promising you'll get the same results, but I just want to tell you it's possible. So let's dig in to what financing and mortgages and that whole new world that you've maybe been conditioned that's scary. Let's find out what it all means. So, this is the next class. You need money, right? No surprise. So, how are we going to get that money and what does that look like? That's what we're going to learn right now. So, your financing options here are what we're going to cover. Now, if you remember just one thing, if you recall from last episode, it was what? Always get a 30-year fix and put as little money into each property as possible, right? So that's always going to be your mindset. And I'll cover one caveat coming up in the future slide here, but this is more or less the best general rule of thumb when it comes to real estate investing. So how to do this? Exactly. First question everyone asks, do I need to form an LLC to get started, or should I buy property in my personal name? I feel strongly your first 4 properties should be in your personal name. I'll tell you why. You're going to get the lowest interest rates if it's in your personal name. Why is that? Well, typically, if it's in your personal name, you're going to make sure that you're going to pay because it affects your credit score. Once you create an LLC and buy a house in an LLC name and get an LLC mortgage, and you have trouble with finances, banks know, hey, I'll let that business fail before I let myself and my own personal credit fail. That is probably accurate, right? So you get rewarded by having a lower interest rate. Now we're just getting started. And I want to save you as much money as possible. And having the lowest interest rate out there, you're going to get that with your personal name. Secondly, your down payment. If it's in your personal name, you're going to have options to put down as little money as possible in the down payment because you can buy properties as a primary residence in your personal name, acquire the property, live in it for a short amount of time, 6 months to a year, and then you can move out and go buy another primary residence in your name and turn that old one into a rental. You don't have to refinance. You don't have to change your mortgage. It stays. So if you got a 30-year fix primary and you turn it into an investment 6 months to a year later, you don't even have to tell anyone. You just move out, go buy a new house under a new primary with a low down payment, and you just start collecting houses using a low interest rate, low down payment. You can do this in your personal name only. It does require you living in the property. You can just say, I don't have any intention in living in the property. I just want to buy an investment property. Still buy it in your personal name, and your down payment is going to be closer to 20% or 25%, which is fine. That's on par with a commercial or an LLC down payment. Just know it's still going to be cheaper if it's in your personal name. Liability. This is where everyone loves LLCs because LLC stands for a limited liability company. Yes, an LLC exists for that. So if you buy the property in a name of an LLC and you run all the utilities through the LLC, you get a mortgage in the LLC, your insurance is an LLC, all of that's going to be way more expensive than in your personal name. But you get that extra layer of liability protection. They can only sue the LLC and the assets of the LLC and cannot come after you. However, the workaround, if you have multiple properties in your name, is first you have the property in your name, then you have insurance, which is your typical homeowner's insurance. You tell your insurance company once it becomes an investment property, they're going to give you landlord insurance. It's going to protect you, and liability insurance. It's fine. It's actually, that policy is going to be cheaper than an LLC landlord insurance policy. And you get on top of that a second additional insurance policy called an umbrella insurance policy. An umbrella is very, very cheap, and you can get $1 million, $2 million, $3 million, as high as you want, insurance policy that goes on top of your landlord insurance policy. What that means is once all that protection of your current policy that's on there, your landlord insurance policy, your homeowner insurance policy, an umbrella protects everything of that and beyond. So you have an additional level of insurance protection. That is typically pretty good and good enough, if not exact same as having an LLC protection. So this is why I would recommend doing your personal names. You're going to be able to acquire properties cheaper when you're first starting out, and it's going to be lower, and you can get similar protection as you do with an LLC. LLC is, I save it for my season 2 investors. When you're looking at 5 properties or more and you really want to grow fast, that is where you want to start thinking that route. But if this is your first 4 properties, I want to use all the mortgage benefits of a personal name. That includes buying a second home with 10% down and then turning that into investment property, house hacking, which is buying a multifamily, living in one unit, renting out the others. All this comes with great cheap products if you do it in your personal name, and why I want you to buy your first 4 properties in your personal name. You just get that umbrella insurance on top of it, and you will be able to rest easy at night. You can get up to 10 personal name residential mortgages at a time. If this is your plan, you can actually get 10 in your name and 10 in your spouse's name. So if you guys have a agreement and want to move forward, I would definitely recommend buying one property in your name only, and then the next property in your spouse's name. You both can put your names on title, but the mortgage isn't just in one of your names. And this is a way to grow and get 20 properties if you want, all cheap rates and cheap down payment, have the same liability protection, and you can really grow your portfolio. This is how I got it. I did the first 8 in my personal name. Now, you may hit a limit. The reason I didn't do 10 is because I had a debt to income limit. So what this is a mortgage lender is going to say, you typically can spend 45% of your income can be debt. So once I hit 8 properties, that was, I hit my DTI. And then my bank said, I can't give you any more mortgages in a residential name. And that's when I knew I was ready for a commercial loan. So 10 is not necessarily the magic number. It's when your lender tells you you've hit your DTI limit, your debt to income limit, and they just physically can't give you any more mortgages anymore. So that's when you pivot to commercial, or you refinance some of the previous 8 that you already bought using this method, refinance them into a commercial name and a commercial loan, which then alleviates and opens up my DTI. And then I continue buying properties under my personal name. Those are sort of season 2 strategies, but just want to plant that seed and tell you how I think about it and how I went about it. So let's talk, what will these options look like when you do talk to a mortgage lender? All right. Typically, you're going to get 2 options to either talk to a mortgage broker or a mortgage lender. What is the difference here? Well, it's very important to understand the differences here because I highly recommend one over the other. All right. I killed the headline here. Go with the broker. You want a mortgage broker, and this is why. A broker can shop rates for you. What this means is if you go into your bank or any bank, or you just call a mortgage company online, they are typically a mortgage lender. So you walk into Bank of America, Chase Bank, Wells Fargo, whatever your big bank is, you say, I want to get a mortgage. And they're going to say, well, that's the mortgage person over there. And that mortgage person is going to say, great, we have these products right now. And their products vary based on how their books are doing. What I mean by that is that they have all these numbers that say, hey, we want X amount of deposits. So we're going to turn those deposits into a Y percentage of residential loans, some jumbo, some FHA. Oh, we don't have enough conventional loans, so we're going to lower interest rate to bring that balance back up. Oh, we've got too many FHA loans, so we got to raise our rate to kind of balance it out. So this is sort of what matters is the moment you walk in, what's happening in that bank that affects their products and their product offerings. And you sort of just at the whim of what they're going to give you. Now, a mortgage broker doesn't work for one bank. They broker and build relationships and networks across hundreds of different banks. So you go to a mortgage broker, they're going to say, let me see the best rates I can get you. They may go to that Chase Bank, and they actually may get a lower rate than what you do walking in because they do such high volume that they get a discount, and they can give that discount to you. So that's happened to me. I actually got a cheaper rate going through my broker to my bank rather than to my bank directly. But they also have relationships with independent investors, small banks, credit unions. They're going to come back and present to you the best of the best. And so that is the benefit of a mortgage broker. Typically, they're going to have a little bit extra fee, but it's worth it because that extra fee usually covers the savings by them shopping it all around. Now, you get one credit pull if you go to a mortgage broker. So a big, big component of what you can be offered and what rates you can offer is what's your credit score. Every time you inquire about a credit card or a loan, a car loan, or get a new loan, or even call a mortgage bank, they're going to want to do a credit pull to check. This is a small ding on your credit score saying this person's asking for money. A mortgage broker is going to do that once and then go talk to hundreds of banks. If you do it and you call a bunch of different mortgage brokers, well, that's going to be ding, 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 ding. And that could lower your credit score because it looks like, wow, this person's really desperate for money. Now, thankfully, there's a new rule that if all those dings are happen within a 45-day period, they know this person's mortgage shopping, and they're just going to combine it as one ding. But if you're like me, I'm constantly talking to mortgage brokers, constantly looking to see what deals are out there. Because as soon as you close on another deal, I want you to call your mortgage broker and say, let's find the next one. What can I afford? And you're constantly getting that ding. Just do it to a mortgage broker, and it's much, much easier, and you don't have to worry about the credit score thing. Now, a mortgage broker doesn't sell you just their products. Like I said, they shop around and they bring it back to you, the best products out there across all the banks, saving you a lot of time. And in general rule of thumb, avoid the big banks. It's not easier because you bank at a big bank. And these are the chains that you see across the entire United States, the ones that can advertise for commercials. You walk in just because you bank there doesn't make it easier to get a loan. Unless maybe you get a discount because you have millions of dollars on deposits, they will give you a break and they will treat you with kid gloves. But that is not most people's experience when you walk to a big bank. The person sitting at the desk that's a mortgage lender is actually a completely different company called the same, different rules, different systems. They don't necessarily work hand in hand with your checking account. And it's just as easy to give all that banker's information as it is a mortgage broker's information. So don't fall into it's going to be easier because I bank here. It's just not true. Also, big banks don't really care about you, unfortunately. They do such high volume of business that if your deal gets closed or delayed or they provided you wrong information, oh, well, we've got hundreds of thousands of other ones that will work out. So they tend to be pie in the sky, and there's all these added fees. It's always delayed. There's always more headaches with the big banks and the appraisals, and it's just not a well-oiled machine. A mortgage broker, they don't have the budget to do mass commercials, right? So every deal counts. They're all about word of mouth. They're going to do everything that they can to make sure you're happy and that you come back and that you refer them to your friends. And that means talking to your real estate agent, getting on the phone at 10 o'clock at night, answering emails throughout the weekend, on holidays, whatever it may be, to make sure you close on time with the best rate and make it super, super easy. This little extra fee, and I'm talking about maybe an extra quarter point of fees that a mortgage broker may charge you is worth it. Okay. It's definitely going to save you a lot of stress and headaches. And they are going to be your ally and partner in this to make sure that you succeed. And that is where we lead now. Brokers are your allies. They want to give you money, so don't hide anything from them. What I mean by that is if you're running an all cash business or you've got some extra side income, disclose it because you don't want the deal to fall apart last minute. Most brokers, residential loans, are going to give you two main options. One is called a conventional loan. This is your bread and butter loan. 5% minimum down payment up to as much more as you want. It's the same loan to buy a primary residence. You can use a conventional loan to buy a single family or up to a 4-unit building. It's the same loan product. So if you can buy a multifamily, that's great. If you're going to live in one of the properties, then you can put down less than 20%, down to as little as 5%, and you're still going to get the best rates. So a conventional loan is typically what they're going to present to you, and it's going to have the 30-year fixed option that I love and that I want to bang into your brain that you want that 30-year fix as much as you possibly can. This is a beautiful way to real estate invest, okay? The other option that they'll bring you is an FHA loan, and this is 3.5% down payment. It's a way to buy a property with less than 5% down. You can still buy a multifamily up to 4 units with an FHA loan. FHA loan does have extra fees, extra hurdles when it comes to the appraisal and insurance, mortgage insurance, which is fees you can't really get rid of in an FHA. If you can do a 5% conventional, you're going to have more options. I would always go from 3.5% to that 5% conventional. You're going to save a lot more money. You're going to have a lot more options. This is that one caveat I talked about always putting as little money down as possible. However, if you can't qualify for a conventional loan in the 5%, you just don't have that down payment, then by all means, use the FHA. Try to do the 5% conventional when you can. So this is a conversation that your mortgage lender will walk you down as well. I just want to introduce these two concepts and these two words when presented to you. I'm not a mortgage expert. A mortgage broker is, and they are very, very well versed at talking to new investors, first-time home buyers. They're going to walk you down this path, have all the information, and be very patient with all of your questions. I just wanted to kind of give you the two options. Typically, you're going to want the conventional loan to be your cheapest, best rate, and the way you want to move forward. You want to get as many primary loans as you can, which means you got to live in the property for a year. In most cases, sometimes 6 months is as little as you need to actually live in the property. And what's great about this, you live in the property and you move out. You don't have to tell anyone. You move out, you rent it. That 30-year primary mortgage stays with the property. No one cares that you turned it into an investment property. All they care about was that you lived in it for 6 months to a year. You can live in it for 5 years, 10 years. You just have to have the intention to live in it, try living in it. And if your plans change, that's fine. So you can do this over and over again. Your spouse does it, then you do it, and you move in and you move in. It does take some flexibility, some willingness to move. It's not for everyone, but you can still get a conventional loan and say, I have no intention of living in it. And you're typically going to have to put 20% down payment in that situation. I've seen them sometimes at 15% though. Low down payment, lowest rate. If you go this way, for sure, conventional, but also if you live in it, it gets even lower and get an even better rate. Stay with the house. If you move, and your spouse and you can get 10 each. So we covered all these items here. House hacking is probably the best way to grow wealth. This is turning your primary residence into an income machine. That's what house hacking is. So if you live in a single family and you get roommates, those roommates are going to pay you, and hopefully that money covers your mortgage. If not the majority of it, all of it, or even a profit. This, again, is not for everyone, but if you can create the situations, great. House hacking on a 4-unit is wonderful. You live in 1 unit, you get the benefits of the primary conventional loan of 5% down, the lowest rates, because you're living in it. However, the other 3 units are bringing you income and they're covering your mortgage. I did this. I had a house hack duplex where I lived in it, but I also had roommates. So all of my mortgage was covered and I was making an extra $2,000 a month, which was more than my take home pay each month. So just by house hacking, I changed my finances. I was able to save at a rapid rate to go buy my second property and then my third, and it just never ended. The benefit of a house hack also is whether you're using an FHA loan or a conventional loan, you get qualified for more money because let's say you want to buy a single family house, they're going to qualify you for $200,000. But if you say, I want to buy a 4 unit with that same mortgage, they could say, wow, if you're going to do that, we're going to do an appraisal on that property, figure out what the rent is on those other 3 units or those 2 units or 1 unit, depending on what type of property you buy. And we're going to take that and apply it as your income. So if you could buy a single family house for $200,000, you could actually get an FHA loan or a conventional loan for a quad up to $1 million, depending on what the rents are in those other units. And you bringing in way more money. And that is just going to offset this huge mortgage. And it's going to actually make you pay fewer dollars each month than if you just bought a single family house. So a single family house mortgage may be $2,000 and they're going to say, you got to pay $2,000 each month. But if you get $1 million, your mortgage is $4,000, but you're bringing in $3,000 of income. Well, now you're only paying $1,000. So things actually got cheaper because you house hacked using a conventional loan and got a bigger loan out of it. Again, just want to plant the seeds. A mortgage lender is going to walk you through this. And I'm going to give you some talking points when you talk to a mortgage lender, because I want you to call a mortgage lender ASAP. To buy a property in 90 days, you got to know what your budget is, what you can afford. That is what I want you to do today. This is my mortgage broker, JasmineMortgageTeam.com. You don't have to use her. She is, and her company's a sponsor now, but I didn't ask her to be a sponsor until I'd done at least 15 personal deals with her. I've done over 80 deals with clients with her, and she's done me well, and she knows what she's talking about. She's great with newer investors. Wherever you're investing, she speaks the investor language. Just go to Jasmine Mortgage Team, pause this video, go to this website. There's a link at the top of her website that says book a free 15-minute call. Just do that right now. I want you to buy a property in 9 days. It doesn't cost anything. Just to have a conversation, she's going to tell you, hey, I want you to do X, Y, Z, and then I can give you so much amount of money. You just need to know what your budget is and where you stand. You don't want any surprises. Pause the video right now and go book this. Jasmine Mortgage Team. If not, call you another mortgage broker. Just talk to a mortgage broker. All right. So the talking points in this conversation, hopefully you've already booked it and scheduled it. I want to house hack. If this is in case you do want to house hack, this is okay. What does that mean? What does that look like? What is my budget? What's my down payment? I want to buy a multifamily or single family investment property. We haven't covered yet what to buy. That's coming up, but it's okay to have these conversations up front so that when we look at what to buy, you have some sort of basis and some conversation you've already had with a mortgage lender. And when you return and talk to that mortgage lender again, you're going to have a little bit more information. Just get this started right now. This is super important because getting their money is going to be how we're going to get this first property. How much down payment do I need and what is my budget? Great question, great talking point to have with your mortgage broker. They're going to walk you through this and give you some rough numbers in that 15-minute phone call. Most mortgage brokers will do this. So they would love your email. They would love your phone call. They're in the business to give you money. They want to help you. So don't feel like you're bothering them. What can I do to improve my rate or increase my budget? It's like having a free financial advisor because they're going to say, hey, I can give you $100,000, but if you pay off this credit card, I can give you $200,000, right? Like they're going to give you an action plan because they want to help you. They want to give you as much money as you possibly can. I don't say you have to use all the money they can. Just you want to know what are your options. They're there to help you and walk you down that path. Now, every mortgage broker, when you have that initial phone call that you've already booked, is going to give you estimates and rough ideas. They're going to make assumptions about your credit score and your income. That can get you so far. However, if you come prepared for that meeting and have these items in a shareable folder, it could be a Dropbox folder, a Google Drive, or just have them on your desktop ready attached to an email, this is where they can give you real numbers. It changes from theoretical numbers and what ifs to real numbers if you provide them your last 2 pay stubs, your last 2 tax returns, most recent statements of retirement investment accounts, whether this is your IRA, your 401k, stocks. They usually issue you quarterly statements, the most recent quarterly statements. I'm not saying you have to use them. They just want to know your overall financial picture here. And your picture of your driver's license. If you provide them with this information, you start getting real numbers. Now, this is very important. I don't want you to go get this information before you book a call with a mortgage broker, because what happens is you're going to get sidetracked. You're going to find 1 pay stub instead of 2, or 1 tax return. And then you're always focused on building out this Dropbox folder. You never get around to calling the mortgage lender. I don't want that to happen. Call and book the mortgage lender. You get the rough estimate. If you so happen to have this handy, great, but they will leave the call saying, I need these 4 things. Every mortgage broker will, to give you real numbers. Just start collecting this stuff right now. Always have it ready. It's very, very important. But having that conversation without this information with a mortgage broker is more important. So do not let this step of the Dropbox folder or the shareable folder prevent you from booking an appointment with a mortgage broker. Go do that right now. Just know they're going to ask for this. And so I want you to be ready, because this is all about speed. And the longer you take to collect this information, the longer they can give you real numbers, the longer you can make an offer on things, the longer you really understand what your budget is and where to look. So this is the stuff you've got to do today to stay on track to get your property in 90 days. Very, very important. Now, let's talk other mortgage options. They may come back to you and say, I can't give you a mortgage. Maybe you've already hit your DTI. Maybe your credit score needs a lot of work. What are your other options here? This is when, okay, maybe I got to go the commercial route, right? Maybe I need to get an LLC. I have my broke method to real estate invest. This is how to invest without having any money or can't get traditional loans. I do talk about some traditional loans and conventional loans and some 100% financing loans in the broke method. Check it out. It's just informational. You're not going to get the action plan here, at least in the courses, but I wanted to present all the options I've found for free money, or how to network, how to get partnerships here. I cover commercial loans, hard money loans, private money. This is just borrowing money from people, not banks. Seller financing. This is when you buy a property, the seller sells you the property and then becomes the mortgagee. I go in a little bit more detail on the broke method, but a lot of this stuff is season 2 investing, where I also talk about joint ventures, partnerships, syndications. This all is a season 2 investor task. I don't want you to get sidetracked too much for all these very creative, broke ways of real estate investing. I really, really want you to use the primary residence way of doing things, using a mortgage broker, using it in your real name. You're going to get so much further if you can just get your finances correct. All this creative stuff is wonderful when you can't use a mortgage broker to get a residential loan conventional in your name. Okay. That always should be the first step. It's the cheapest, easiest, best way to get financing. All this other stuff is great when that's no longer an option, but you got to find out whether it's an option for you right now. Okay. Portfolio loans is another thing. And this is where you get, once you have 4 properties, I can get 1 mortgage across the 4 of those, the portfolio, but we're not ready for that. These are season 2 things. Okay, guys, let's just talk financing under your name. I want you to do that today. Book that call with a mortgage broker. That's the most important thing. And then have those 2 tax returns, your 2 pay stubs, if you're married, it needs to be both sides. If you're going to get both of your mortgage in both your names, the investment funds and your driver's license, and then they can give you real numbers. Very, very important, because when we start talking about what are you going to buy or where to go look, it all starts with your budget. And when you talk to a real estate agent, that's the first question that they're going to ask you. What's your budget? I want you to know your budget. And that budget may be X if I'm buying a single family, Y if I'm buying a multifamily, Z if I'm buying a short-term rental or a vacation home. mortgage broker is going to give you this answer. And it's very, very specific to your finances. Get it done. Go do that. Very important. This is going to be your best friend. So build a relationship. If you have a bad experience with mortgage broker, there's millions out there. I'll provide you more names as well. But this is what really got me going, is having that partner who I can bounce ideas off, run deals with, understand what I can afford, and really figure out the real numbers to know whether it cash flows or not. So go get that done today, and I'll see you in the next class.